Welcome to this tutorial brought to you today by To The Tick, and today's subject is the bare symmetrical triangle. Now, symmetrical triangles in general, by pure definition, are one of the few price patterns in technical analysis that can be considered bullish, bearish, or completely neutral. Typically, these triangles can be seen as trend continuation patterns, but they also can be setups for reversals. So today we want to focus on recognizing the symmetrical triangle. What does it actually look like? And then we're going to see how to trade the bearish trend continuation setup. So we want to recognize what it looks like in that situation. Now, this image represents a symmetrical triangle price pattern. It's important to understand that a price pattern has two parts. It is considered bullish or bearish defined by the pole direction. You'll notice the base of the pole is up high, the pole itself is extended, and then you get your pole tip. It is pointing straight down, therefore it is bearish. Now, the triangle, which is part 2, would be considered totally neutral, just there by itself. So it has to be attached to the pole in order to actually create the price pattern. So in other words, you do not really look for a setup of a continuation of trend without the pole showing you the trend. So in other words, it takes these two parts. So we're going to focus entirely on this symmetrical triangle price pattern, where traders have high odds that the pattern will lead you into that continuation of the bearish trend. So instead of looking at a nice little image, we need to see things unfold bar by bar like we do as traders. And the first thing you need to see is a reference point, and the bears have been hammering into this bullish support line here, and we need to see them get through that line, and we need to see them do it with some gusto. So basically, we get the break on the price, they get the breakdown and confirm, and you are watching the formation of your pole. You'll notice that the pole has the base planted where up there at the top. It's created and it's tilted in towards price. It always will be slightly tilted. And then you come to a tip down here at the bottom of the pole. Again, we're in a bearish situation because the pole tip is pointed straight down. You'll also notice that you hit a low spot, and that swing low right here is basically saying, okay, maybe they're just taking some profits, but the point is for us, they failed to keep going with the decline. So now here's your measurement of that gusto and that impulsive thrusting move that created your pole. I cannot stress enough right now that the deeper, stronger, faster, harder the action, both in volume and price, that creates your pole, the better. And then you want to see these swing low effort, swing high, swing low, swing high, and basically with that structure, we can now see our immediate definitions of both resistance up there on the top and support across the bottom. We have outlined our pattern. We now are looking at establishing our pattern. So let's go back and look at our original image, and we can say, okay, we watched the pole be formulated. So let's see what part 2 does. Now, part 2, we've given it our parameters of support and resistance in our immediate picture, and I hope the first thing you're going to say to me is, whoa, wait a minute, Lav, that picture of your image does not look like what I've got drawn on my screen. Okay, it's all right. They're gonna look different. Matter of fact, symmetrical triangles can take some time, and it might be all the way across your screen. But the point is the structure the same? And what is that structure? What structure are we looking for in a symmetrical triangle? Well, what we're looking for here is those higher lows and lower highs. Notice both of those images have that, higher lows and lower highs. This is actually called converging trend lines. Now what that means is that the action in here, the price action, is getting squashed, and it's getting tighter and tighter. Both sides of this, the support and resistance side of this, are both still squeezing. And this location where they're squeezing, we call an apex. Now that apex represents that middle ground in your picture. So we have also established a breakdown line with our support line, and that's where we're looking for prices to break down. Again, this is continuing to rise, and the pattern itself of the triangle is shaped by the slope of your two lines, your support line and your resistance line. That slope is actually also going to create your breakdown point. Where will it come across that line? You don't know yet. It hasn't happened yet. Triangles can take some time. But as a trend continuation trade, we don't want them to stay in here for long, because our momentum gets squashed the further and further and further and further those prices push to the apex. Because basically it means you've got an equal balance of supply and demand. And we really don't want them to stay in here real long. We want the bears to have maintained complete control. So consolidation, yes. We want this to be a pause. And phase 2 or part 2 of a price pattern, you want them to consolidate both in price and in time and in volume. You want to see your picture coordinate with that. Okay? We want to see them get in here, consolidate, and then get on with it. And the best trades with triangles will come with the breakdown of your support line 50 to 75% of the way of its formulation. Meaning, if it gets all the way to the apex, down to a tick, you're talking about 100%, and the odds for a symmetrical triangle decrease if you squeeze all the way to that apex. Now, it doesn't mean they won't work. It just means that the odds decrease. They don't perform as well when you get that much energy out of those bulls. That's basically what you're saying. You want the bears to maintain control. So our first target again is for the bears to do the same thing that they did before, and that was giving us a big breakdown with some gusto and energy. And again, we want to see volume, and we're looking for a surge again in volume, and we want the price to go along with that. Now, aggressive traders looking for the bears to maintain this control and truly seeing this as a trend continuation pattern are welcome to trade short trades off that upper resistance line. You're going to be able to use a very tight stop right above your entries because you want the bears to maintain control. If they don't, you don't want that trade anyway. So the concept here is they've committed to the pattern, and you want them to hang on to that pattern. Now, the more conservative approach in most technical analysis will recommend that you only take this trade once you get a breakdown, and some of them will even tell you to wait for that confirmation of that breakdown, the same way we had to do it up there that first time, before trading the pattern. But the really cool thing about this pattern is that we get to use the structure itself, the price pattern itself, to actually create and generate a target. We get to use the background structure to create our targets. And the first one, the most conservative, would be to take the swing low, swing high, which is the widest part of your triangle. Typically, it's that first big pull up there that creates your upper resistance line. And you take that measurement and you're going to subtract it, because we're going short, you're going to subtract it from wherever your breakdown number comes out. Now, that's called a measured move. We actually get to take a measurement from the structure that was actually there. The more aggressive trader who believes this is a big trend continuation trade is going to take the measurement, again, a measured move, of the full length of the pole. The initial impulsive thrusting move that created the pole in the first place, you want to see that entire move repeat. In other words, you think this is the first or second leg of a big trending action and you want to see it repeat. And that's the more aggressive target to be using for this. And I do mean, yes, full repeated move out of that pattern. Now, the traders that are looking, we're all looking for that surge in volume and price, again, that can clear that immediate support. And let's go on and watch this unfold. And oh my goodness, look at that little poke up there on my resistance line. Believe me, they're going to do that kind of stuff. You're going to see them make a rush maybe at the top before they let go. And again, you're going to have to find what you want to use for confirmation here about where you want to place your entries, how you'd like to trade it. Some folks want to see them take out that swing low in the background before they're interested in finding this trade. But again, you're working with the odds in your favor. You're working with the trending action in your favor. And the prettier your triangle, the prettier it stays with that 50 to 75%, breakdown. Notice we didn't get all the way to the apex here. We stayed in that 75% range, and we got a nice pattern. So we have part 1 is actually getting to watch the formation of the pole. Part 2, watch your formation of your triangle, be able to take your measured moves in order to set up your targets, and then we get rewarded with a beautiful bearish continuation breakdown. In summation, it's important to understand that the pole here is the most important characteristic that you need to be able to recognize. You want that thrust and volume and price. Again, the more energy, volatility, deeper and wider those prices get, the better. You want strong, surging volume. You want to be really aware of the fact that you just had a breakdown, right? Now, the consolidation or part 2 phase is considered a pause. You want to see it stay in that triangle structure of the symmetrical triangle, which is the lower highs and higher lows converging trend lines there and squeezing to that apex. And then from that apex and or that new breakdown, you want to see a new push from the bears in both volume and price. And finally, we're going to be able to use the price pattern itself to target measured moves using the apex and then subtract the measurement of your pole for the full bearish continuation part of the pattern, or you're welcome to take that breakdown price and subtract your triangle measured move in there between your swing high and your swing low. Now that completes our video tutorial today on the bearish symmetrical triangle, but I encourage you to come and visit our website because I usually I put all these videos as well as text and also live chart examples for you to be able to have to review the information. This is a really pretty one. This is a very volatile instrument right here. I also try to mix up the instruments, and you'll notice I've got volume across the bottom and price over here on the right axis, and this one in particular was a real pretty little pattern. It was a nice quick bear continuation pattern, which we really like. It came in and followed all the rules in volume, and again, it's a highly volatile stock and instrument. And basically, you'll also notice that a lot of times in these continuation patterns, there's a lot of back-to-back trades, and there's some other pictures that keep coming, keep coming, keep coming. But please come and learn how to work this one. Here's a second example, and this one is a little different from the standpoint that you were trending. The bulls were trending, and they got into a big old resistance hit here in the big picture, that first effort, and it failed. And it's what actually created your bearish pole. This pattern took a little longer. The structure's not really beautiful for two reasons. One, because it came back so high on your pole value, but two, it also squeezed really tight in here for this apex. But again, look at it. Does it fit all your rules? If you're going to take a chance and try to follow a trend action, where is it? The trend action was that breakdown on price. They were not able to get back up to that breakdown price, couldn't get back through it, so the resistance held. Big message there. And again, this was a really pretty picture that just kept coming, kept coming. These are two more flags that just kept coming, and your bearish poles get repeated, repeated, repeated. So come and do the measurement. Everything is the same size when I do these for you, so that you'll be able to monitor it and see how you feel about it. Thank you for joining us today. This has been brought to you by tothetick.com/edu. Come join our website and subscribe, and we have lots of great educational material for you. Thank you and goodbye.